Welcome to this edition of Better Business Bureau's Building Trust in Trying Times webinar. I am your host, Dale Dixon. So good to have you with us. Thanks for taking time. This webinar is live for BBB accredited businesses. Those are businesses that have taken a pledge to uphold a set of standards, to do what's right simply because it's the right thing to do. You're one of those businesses. Thank you very much for taking that pledge and making our marketplace a more trustworthy place for both buyers and sellers. Today's webinar is to continue to open the blinds, so to speak, and get more clarity around the SBA's PPP and EIDL loans, and specifically what's required of businesses as we look at having those loans forgiven later on. We're going to make this as interactive as possible. You will notice that there is a Q&A box at the bottom of your Zoom screen. If you have questions that come up during the presentation today, we would ask that you use that Q&A box to ask your questions. As you ask those, also be reading the question string that comes in. There is an up vote, a little thumbs up that pops up on the screen. You can use that to give a thumbs up to those questions that you relate to or that you're looking for an answer to as well. So make sure and use those voting privileges in the webinar. Building Trust in Trying Times is a large body of resources for small business just like yours. This webinar is being recorded today and will be posted on our YouTube channel along with all of the previous webinars that have been recorded. So make sure and check that out. And also, if there's some information that's provided that you'd like to go back to and reference again, just know that this webinar will be recorded. Now, one important caveat for you, because this is recorded and we're talking about timely information around the SBA PPP and EIDL loans. The information is changing and changing rapidly as we look for interpretation on the rules. So just understand that as this is being recorded on this Tuesday, May 5th, things are going to change. So make sure that you're out looking at the SBA website for the most up-to-date information. And I'm going to introduce our guest today who is bringing the information to you, Wyatt Johnson of Wyatt Johnson, I should say, of Angstman Johnson. Wyatt is a civil trial veteran, lead trial counsel. He has tried multiple cases to juries and judges. He also frequently appears before the Idaho Supreme Court. In conjunction with his professional practice, Wyatt is an active member in his community. He's served on the Idaho Supreme Court Evidence Rules Advisory Committee. He's a past president of the Idaho Trial Lawyers Association and is past chairman of the Idaho State Bar Litigation Section. He regularly lectures at seminars and workshops and provides continuing education for attorneys and other professionals. And as Wyatt was talking to us before we started this webinar, he said something that I want to share with you. Wyatt is an attorney, but he's probably not your attorney. So the information that's presented in today's webinar is really important to remember that he's talking in generalities based on what we know as of today, and things definitely can change. So Wyatt, hopefully that is enough of a caveat for you. Thank you so much for spending some time with us today. And with that, I'm going to turn it over to you to bring us up to speed on the latest, what you know, and specifically what you're hearing in the business community.
Sure. I'm glad to do that. Thank you so much for that great intro. And I got to admit, you're a pretty tough act to follow. You've got that broadcasting thing down. So why don't I explain what I'm going to try and do here is I tried to package up what's going on with the federal stimulus bill in terms of things that matter to regular people, things that you're going to see. And I'm trying to get a little bit away from the news. I'm not going to be going into the details that you're going to be able to pick up and read in any sort of a news feed. So why don't I just go ahead and get started? I think that the one program that everybody in business seems to know about and everybody's really excited about is the payroll protection program, the PPP loans. Everybody's heard about them. You go out there, you get a loan for a certain amount of time, and you get to basically keep paying your employees. The details that are getting overlooked, or the details that aren't necessarily going to be out there, but get kind of interesting and that maybe you should understand, have to deal with eligibility, forgiveness, and taxes, and the interplay with other loans, such as the economic injury disaster relief loans, the other loans. So why don't we start with that? The eligibility, the statute went through and made these loans basically, you could qualify if you were in business and you had employees. That was it. That's all that Congress required. What changed is the SBA, when they went through and put out regulations for these loans, added some additional limitations on who qualifies for this. And it can catch people by surprise because people can be doing things that would seem to fit within the literal language of the statute, but after the SBA regulations, they do not. And why don't I run through a real quick list of that? First, it's anybody engaged in an illegal activity under federal, state, or local law. That's not as obvious as it would seem. And I think that one place where probably the most obvious to me where it's going to apply is going to be where you've got businesses engaged in legal marijuana distribution or sale under state law. Marijuana is still an illegal business under federal law. So notwithstanding the fact that these people may be involved in businesses and have employees and would qualify under the literal language of the statute, the regulations of the SBA say that, yeah, anybody engaged in that business is not qualified. It also includes local laws. And I haven't seen this, and I don't know that it's necessarily a big issue, but you could have somebody that is doing some business that is generally legal on the state and federal level, but say it violates the local zoning ordinance. It would be possible that that person might not qualify for the PPP loan. I haven't seen it. I don't know that it's a big issue, but it's an interesting quirk to the rules that isn't necessarily apparent. Household employers. Household employers, that's if you're an employer, but it's your, you've got nanny, maid, housekeeper, landscaper. Household employers do not count as employers for purposes of these PPP loans. For small businesses, if you have somebody who's got 20% of the ownership or more, who has had some sort of criminal problem in recent history, if they've been convicted of a felony in the last 5 years, if they've been indicted, just charged but not convicted, or if they're in the middle of some investigations, the business isn't going to qualify. And so that's kind of a bad person limitation. Also, anyone who has defaulted on a federally backed loan within the last 7 years, and that's not necessarily going to be just your business loan. That could be somebody who hasn't paid their student loans. So it's a lot more restrictive after the SBA got in there and limited it. But still, for a huge number of employers, it's a big benefit. Why don't we get to the real exciting part about it? It's the forgiveness of the loan. I think that everybody knows there's a certain amount that you can get based on your payroll and your expenses that you had before this that you'll be able to take out in the loan. How do you get it forgiven? Okay, first thing, it's a use it or lose it benefit. In order to have this loan forgiven, you need to spend the amount, you need to spend these loan proceeds during the covered period, which is basically starting February 15, that's already gone, but it ends June 30th. So if you take out one of these loans, you can't sit on it, you can't hoard it, you can't use it for reserve cash. You need to spend these funds before June 30th for them to qualify for forgiveness. Second, it's you can only spend it on limited things. 1, payroll costs. 2, interest, rent, utility expenses. Now there's a big catch on that. 75% of it has to be spent on payroll cost. So you can't go out and you can't pay a huge amount in rent or interest or any of that to try and circumvent your business expenses. The intent is these have to go to payroll expenses. And when we're talking payroll expenses, the obvious stuff, you're going to have salaries, wages, employee expenses. There is a cap. Highly compensated employees, basically that caps out at what would be the equivalent of $100,000 a year or less. So if you've got a highly compensated employee with more than that, those payments above that don't count. Sole proprietors do get to benefit from this up to the 100% as long as it represents some sort of income off the company. So I think I was reading it, and the way that I read the statute, I think that if your company is operating in a loss, I don't know, or if it would otherwise fall as a loss, there might be some question about that. It might take a closer look beyond what I can cover right now. The limitation's got to be on payroll costs. It will be reduced if you reduce the number of employees that you have during the covered period. Now, that does not mean that you need to keep the same employees. You can have turnover. You've got to have the same number of employees. And so there are some questions about, well, what if I had X number of employees, but I've got an employee that leaves or some other circumstance like that. You go ahead and you replace that employee. And what they'll do is they'll go back through and they'll audit you at the end of it if there's a question. They look at how many employees you maintained during that period. So what you want to do is basically maintain the same number of people on payroll. You're not necessarily tied to the same people, though. The consequences, if you don't or if it goes down, is it will reduce the amount of forgiveness at the end of this period. Anything that's not forgiven, though, I mean, it's not an absolute disaster. We're not going to send out a goon squad after you, or they're not huge penalties. Any part of this loan that goes through and it isn't forgiven, what you end up with is you've got a 10-year line of credit. There's no guarantees on it. Or no personal guarantees. There's no collateral. Interest is capped at 4%, so you're going to have a low interest rate, and the payments are going to be deferred for 6 to 12 months. So, worst case scenario, you're not able to maintain all the employees for whatever reason. It's not an entire disaster. I know that we'd all like to get it all forgiven, but it's not something to panic about. Now, the payroll protection loans are completely separate and apart from I'll try not to use the acronym, but the economic injury disaster relief loans. Disaster relief loans are a separate loan. This is a little bit more traditional. They generally require some collateral. As far as collateral, not sure about the guarantees, but the interest rates are low. You're looking at about 3.75. I mean, not the lowest interest rates, but low, and it's up to $2 million, and it's up to $2 million. That can be a 30-year loan. It's a good opportunity to look at a loan for probably refinancing some other disadvantageous loans that you might have now. You can get both the PPP loan and the economic injury disaster relief loans and use both. If you use funds from the disaster relief loan to fund payroll, if you use that to fund some of your payroll, you can use the PPP funds to essentially refinance or pay back the disaster relief loan, and that will count as that counts as your allowed use for purposes of forgiveness. That might get a little technical if you're getting lost, or if you have both loans, go back and double check it. Make sure that you're keeping track of which loan funds you're using to pay which expenses. You're going to want to make sure and take care of that at the end. Taxes get really interesting under the programs that have come out. First, why don't I start with a basic principle that a lot of people understand, but isn't necessarily always intuitive. A lot of people learned this in the last recession. If you have a debt that is forgiven, somebody waives the debt, lets you walk away, doesn't make you pay off the debt. in the eyes of the IRS, they treat that forgiveness as income. They treat it as if you were given that money as income from whoever the lender was. And you get taxed on that. And it can be really painful. The statute on the PPP specifically deals with that. Maybe. The statute says is any funds that are, any loans that are not forgiven are not taxable. So you go out, you get your PPP loan, $100,000, you use it, you pay your employees, you keep your employees on staff, that loan gets forgiven. While ordinarily that would have been $100,000 of income, it will not be treated as income for tax purposes at the end of the year, which is well intended. The last that I have heard, and it's been circulating, however, is that the IRS does not easily give up on revenue. There is a parallel rule that the IRS has that says essentially that if you pay expenses without something that is taxed as income, you cannot deduct that expense. And I may have misstated it, I may have blundered through it, but it might be that the IRS might be working on an end run around that tax limitation. This is something that is not well developed. Nobody's had any experience with it. It's up in the air. I think it's something to keep an eye on. It's quite clear that the intent of Congress was that these PPP loans should not be incurring tax liability, but we're going to have to keep an eye on the IRS for that for a little while. There are some other additional tax benefits that are out there. If you're an employer that falls in the category that you're required to give family medical leave or sick leave, still a small employer, you can get tax credits for any of the required sick leave or family medical leave that you need to give to your employees that are related to sickness, quarantine, school closings, that. It's an issue to keep track of, pay attention to, and make sure that you're bringing it up with your CPA when it comes around to tax time next year. And by the way, for anyone who is in Idaho, while we're speaking of taxes, as we all know, you've got the federal tax extension. The federal tax deadline was extended out to July 15th of 2020, which was just a blessing for everybody. In Idaho, because we have constitutional limitations on our revenue, our extension ends 1 month earlier on June 15th. So make sure that you're getting your taxes together for filing in June, not July, because you're going to be a month too late for Idaho filers. So keep an eye on that. How about some day-to-day real person stuff? And this is going to be the loans that individual people have. What's been happening with that? Student loans. First, there's anyone with federal student loans. They're eligible for deferred payments for 6 months. If you're an employer and you are in a student loan, if you've got an employer assistance program where you're paying your employees' student loans, you can go ahead and this year you can pay up to $5,250 toward that employee's student loan. You get the deduction and the student doesn't have to treat it as income. So it's something, or the employee with the student loan. So that's a nice benefit that you'd be able to throw to some of those employees. Residential mortgages. These are loans on people's houses, 1 to 4, 1 to 4 units, but your residential loans. Right now, anybody that has a federally backed federally backed mortgage or federally one that's property that's related to a federal program. So think FHA loan, VA loans, something that's held by Fannie Mae, Freddie Mac, some Department of Agriculture loans. They are eligible for a 6-month deferral on any sort of payments. And all they need to do is they just need to submit a request to the servicer and say that they're suffering a COVID-19 hardship. On top of that, there is a potential for an additional 180-day extension beyond that. So people are looking at 6 months to a year that they're eligible for deferrals if they're suffering from hardship. Doesn't mean that the interest doesn't accrue. So your ordinary interest is going to keep accruing during that period. But the lender cannot tack on any penalties, fees, or default interest during that period of time. Landlords who have rental properties, depending on where you are in they've got a somewhat different situation. First, as far as deferrals, landlords can request a 30-day forbearance, and they can make 2 additional 30-day referral requests. And you've got to make those fairly quickly. I think you've got to make those extension requests 15 days before the period of time runs out. So landlords, if they're federally backed loans, and that's the key, it's got to be a Fannie, Freddie, or it's got to be an apartment that's involved in some sort of a federally run programs, say if it's in a Section 8 program or something along those lines. You're going to have to do a little bit of research on this. As far as Fannie and Freddie, both of those agencies have a tool on their websites. You can go and you can actually run your loan, and it will check and it will tell you if that is a loan that is currently backed by Fannie or Freddie. And you wouldn't necessarily know this otherwise. It's something that happens on the secondary market. So go and check their websites if you've got any questions about that. But here's the catch for a landlord who accepts that deferral. During that period of time of deferment, that landlord cannot do any evictions, charge any late fees to any tenants for non-payment of rent. Also, if you've got a tenant that's at the end of their term, you cannot require that tenant to move out without giving them 30 days advance notice, and you can't give the 30-day notice during any period that the landlord is in forbearance. So there is a catch to that. It's for the landlords, they can get the forbearance, but they're not able to get rid of their tenants. Now, there is a further moratorium under the CARES Act that pertains to all eviction filings. I realize this is going out in more than just one state. I'm in Idaho, so this has some special circumstance. This is not exactly as it would seem under the statute. And here's the problem with it. Evictions are a matter of state law. This is a states' rights issue. So the constitutionality, I think, of this portion of the statute, which would prevent state courts from processing evictions under state court law, I think is out of the gate unconstitutional. I would not have given it much credit in Idaho until yesterday on May 4th. On May 4th, our Supreme Court issued an order. While it is not explicit, it issues some forms and lists as defenses the grounds listed for this eviction moratorium in the Federal Act. For purposes of Idaho, I would take that as an adoption by our Supreme Court of the federal eviction limitations. And I think for purposes of Idaho, that moratorium now applies. The moratorium period for those evictions is, it started effective March 27 and it runs through July 25th. It prevents evictions for non-payment of rent. There are other circumstances where you can evict people, such as the manufacture of drugs, things like that. You can't tack on any fees or penalties for non-payment of rent. And likewise, if you got somebody at the end of their term, you need to give them 30 days advance notice before forcing them to leave. But you can't give them 30 days notice before July 25th. This doesn't make the debts go away or the obligation to pay rent go away. These debts will still accrue. And if somebody's not paying their rent, they will owe that money. It just affects the timing of it. And why don't I get to one last item, fair credit reporting. This is something that may be of interest to a lot of people. Starting for a period effective January 31, 2020 through a date that is yet to be determined. It's either 120 days from the act, which is going to be July 20th, or 120 days from the end of the declared federal emergency. There will be no adverse credit reports for accommodations that are given in contracts. So if people call up, they ask for deferrals, loan modifications, anything during that period of time, they are not supposed to have adverse credit history shown on their credit reports. So those are kind of the highlights of what's going on with the federal COVID legislation right now. And I think that Dale, if you've been going through and looking at some of those questions, what are some points of clarification I can help you with?
So we have the questions stacked up. I'll just set a level of expectation for our webinar guest. Number one, thank you so much for using that Q&A box and using the upvote feature. We're going to work through these based on upvotes, and we only have about 30 minutes tops to get through where we're at right now with 42 questions that have stacked up in our Q&A section. So Wyatt, thank you so much for the information that you've provided up to this point. And we're going to work on getting some more clarification from folks as we work through these questions. So Don wrote, when we applied for the PPP, we were told by our financial institution that payroll taxes were part of the 75% payroll requirement. Our accountant has told us that the only payroll tax included in this program is the state unemployment tax. Please clarify which payroll taxes are permitted on the program.
I think you said it was your CPA that told you about the taxes. I think your CPA is correct. The federal payroll taxes are not included in that payroll amount.
So, perfect. Dennis asks, is it true that you need to request for forgiveness before the 8 weeks from the start of the loan? So it looks like a timing, the question deals with a timing issue on when you have to file.
Request for forgiveness. All right. Well, there you go. You're being tricky on me. Let's see. I honestly would have to look at exactly when that forgiveness request input goes in there. It'd take me a little bit of time. I'm sorry, I don't know that right off of the top of my head.
Okay. And this is also a good opportunity. The SBA is keeping its website up to date. Is that the best place for somebody to look for rules as new interpretations come out? Also, or is it better just to work directly with their lender? Is that the place to look for interpretations?
I think I would go to both places because
Okay.
that request, I think that loan forgiveness request, it makes sense that that's going to go to the lender. So if you stay in touch with the lender, and you're going to have to give them some working room here too, because these lenders have only been working with this program for a little under a month now. So they're trying to figure it out as they go too. It's not something they've ever done before, or that anybody's ever done before. So.
Excellent perspective. Don asks, if a business receives PPP funds and they remain open, will this affect the forgiveness of the loan?
Well, if you're paying all that you need to do is pay your payroll expenses. You need to pay the payroll expenses. You need to pay the rent. If the business isn't operating, I don't think that affects the forgiveness. It's just that it's got to be on the expenditures. What they want you doing is they want you spending that money on your employees and your necessary expenses.
Okay. Petra asks, are we able to include employer paid disability as part of our benefits to include in payroll costs? This is not a state program, but a program we pay for as part of our benefits package. She uses the acronyms of STD, LTD, and LIFE.
Let me see here. I'm going to try and, if I've got a second, I'm going to see if I can really quickly catch the definition of it's a defined term, payroll expense. Let me see if I can dig that up here real quick. The act is only about 400 pages long, so some of this gets a little bit detailed.
So I will ask our viewers, as we're looking for the answer on this one, if you want to go into those questions and look at the questions that are most relevant to you and you would definitely like an answer for, and make sure you upvote those questions. Look for a little thumbs up signal next to the question, hit that, and you can upvote those questions. And the way we're working through the questions right now is that we're looking for those questions that have the most interest from our wide-ranging audience to answer first, so that we're helpful to the most people as we are working with limited time on this. We're going to have to wrap this webinar up at the top of the hour due to time constraints. So if you're in there, make sure and upvote those questions. You ready to, did you find the answer?
Well, you know what I found is I found what you call a gray area there. The way that the statute refers to it is it includes as payroll costs when you get outside of your salaries and tips. It allows for payment provisions of group health care. This isn't exactly that. It provides for payment of any retirement benefits. It doesn't expressly deal with disability. However, that said, the SBA may by rule be adding to that, just like they did on the eligibility requirements. And so they might be able to flesh that out. That is a detailed question that doesn't jump out. And I think it's a very discrete section. So if that's a big portion of the expense that you're relying on for the forgiveness, what I would do is either have somebody like me go ahead and do some deeper research directly with SBA, talk to your lenders. You might not be able to get a really good answer right out of the gate, and it might be that the answer comes in a couple of weeks. But I would pay attention to it if the amount's enough that it's going to make a significant difference.
Okay. Don asks a question, upvoted 9 times. Are bonuses acceptable?
I think bonuses are acceptable. Salary, wages, commissions, or similar compensation, whether that's going to be in bonus or not. The issue is, A, does it stay under that threshold where you're not going to end up with paying for a highly compensated employee? Basically, the cap is what's equivalent to what an employee making $100,000 a year would make. So you've got that basically on a pro rata, and it's not all 100,000 at once. It's during that period of time. But if it comes as a bonus or otherwise, I think it's fine as long as it goes to that payroll expense. What they'll be looking at is they will be looking at whether you spent it, what you spent it on, and whether or not you maintain your employees.
Okay. Karen writes, upvoted 8 times with a thumbs up, still confused on what the allowable payroll expenses are.
All right. Allowable payroll expenses. You got your simple stuff that everybody can think of. That's going to be, your salaries, your wages. That's easy. Second, cash tips or equivalents, anything. I think if the tips go through the company, right, that's still probably easy. Leave, if you pay vacation, family, medical, or sick leave, that's a payroll expense. If you pay the healthcare benefit premiums, healthcare insurance premiums, those, for your employees, that's part of your payroll expense. Retirement benefits, and maybe the disability might fit in there, but your retirement benefits, that's going to be the 401k contributions and things like that. Payment of state or local tax on the employees, but not federal. That's what it includes. What it does not include is, and I think that the real cap is, where you have highly compensated employees, say somebody who's making $120,000 a year, any portion of that wage or salary that would be attributable, basically I guess the pro rata monthly share of that additional 20,000 a year above the 100 is going to exceed an allowable payroll cost. And I hope that made sense.
That gives clarity, yes. So Matthew asks, given that my company is essentially still closed by the state, is there a penalty or benefit to just use the PPP proceeds as a loan instead of for payroll?
All that happens is it just becomes that you don't get the forgiveness, which is the big benefit. But if you just choose to use it as a loan, what you've got is you've got a 10-year loan, you got deferred payments, you got reasonably good interest. It's capped at 4%, so it's not going to skyrocket on you. And you're going to have some payment deferral on that. You could go ahead and do that. You just don't get the forgiveness benefit.
Okay. Chris writes, I've received PPP funds, but we are far from being able to open. We won't be able to reopen until late June. And this might be a similar question. It's better for me to hold on to the money and treat it like a loan. Do I have to use the money for payroll, or can I hold on to it when we actually need payroll funds? Basically the same answer.
Covered period. Right now, it's a use it or lose it opportunity. You've got to spend that money before June 30th on the allowed. You got to spend it on the allowed purposes, either the payroll, mortgage, interest, and subject to those limitations before June 30th. If it's after June 30th and you spend it, it's fine. You'll just need to repay those funds. You don't qualify for get forgiveness.
If for some reason we didn't get the 75% payroll, or they removed an item during review, would the whole loan not be forgiven, or just the balance after whatever number they approved for payroll? I'm a little concerned about overpaying what would be considered normal pay rates.
Right. Well, I'll tell you that based on anybody's experience, nobody's quite sure. Nobody's processed any of the forgiveness as far as I know yet, because we haven't gotten to the end of the period. The way that I read it, I believe that all that would happen is that your forgiveness would be adjusted. So for instance, there's a specific provision in there dealing with if you have reduced employees during that period of time, your forgiveness amount is going to be adjusted according to the reduction of the employees. So I would anticipate that all that's going to happen is they'll just make an adjustment of your forgiveness. The statute was not incredibly detailed on those provisions. They were going fast, and so there are a few questions that remain unseen. I think that the intent would be that it's just an adjustment.
Okay. Our next question from Tara with 7 upvotes. Can we use PPP funds for rent outside the covered period, prepaid rent? We read workman's comp is not forgiven at this time. Could it be added down the road?
Ooh. All right. Let me look here and see if I can get that. I need to. So you'd be talking about payments during the payment period, but paying for other like loans and arrears. Is that if you had an outstanding?
The way I'm reading this question, can we use PPP funds for rent outside the covered period? Example, prepaid rent. So this would be if she wants to pay her July or August rent right now.
Right. Okay.
And then we read workman's comp is not forgiven at this time. Could it be added down the road? So have you heard any rumblings about that being adjusted?
As far as the workers' comp, I haven't heard anything specific about the workers' comp.
And as you look through that, Wyatt, I'm going to remind our viewers of an upcoming webinar that we have on Thursday at 2:00 Mountain Time with Josh Linkner. And you should do a quick Google search of Josh's name if that name is not familiar to you. He is a global expert on innovation. And we're going to talk about the small incremental things that a business can do to realize opportunity in the midst of what we're going through right now. So if you're looking at some interesting things happening in your industry, in other industries where people are starting up new businesses, changing the way they're doing business, and you're thinking, okay, I need some help sparking ideas on what I could do with my business, this is the webinar for you. Josh Linkner is a globally recognized innovation expert joining us live for this webinar this Thursday at 2:00 Mountain Time. And I'm going to ask that our great team working behind the scenes, Jamie and Jason, put the link for the registration. It's already there. It's in the chat box. And I see Wyatt is ready to answer the question.
I tried, Dale. What I can tell you real quickly is that if you had interest that had accrued before the covered period, if you had some outstanding interest that you owed, that's okay. If you're making payments on a lease that existed before the covered period, that was before February of 2020, you're okay. Making, say, a forward-looking balloon payment, that's a specific circumstance. I can't find the answer to that really quickly. I do think it's addressed. I just can't grab that one right off the top of my head.
And you're looking on the SBA website for that information?
Actually, I'm looking directly at the statute.
You're looking at the statute, of course. You're the attorney. So the another option I would say for people who are looking for these very specific instances, number one, look through the statute. That is onerous reading, and then be looking at that SBA website. So Jade asks, what do we use for self-employed payroll for the PPP loan forgiveness? We take draws, not payroll. They used 1/12 of our 2019 Schedule C net income for qualifying for the loan. Our lender did not know what would count for payroll towards loan forgiveness. I've heard we might be able to use our 2019 net income divided by 52 times. Is that true?
Well, it's I think the way that I read it, because you've got the payroll used in two different ways. You've got the historical payroll that's used to calculate the amount of money that you can qualify for. Once you do that, forget about it. That's over. The next issue of forgiveness has to do on what you spend it on going forward, and looking at payroll from that perspective is a different issue. So that's what you actually spend, not what you've historically made. The historical number just deals with what you qualify for. Now, the payroll costs include for sole proprietors in the way that they frame it, it's got that $100,000 cap, but if you spend it on disbursements to yourself during the covered period, and you're not compensating, you're not drawing more than would give you essentially an income over $100,000 a year, or that would be forgivable. That counts as the payroll cost, even though for owners, they recognize that it comes out differently, like you may be doing it just as a disbursement or a distribution or something along those lines. But got to spend it. So your historical income is no longer the issue for purposes of the forgiveness of the payments.
Just track those disbursements.
Absolutely. If you can, the simplest thing to do, if you get that PPP money, open a brand new bank account and use it for nothing but those allowable uses. So it's super easy to trace.
Okay. Robin asks, are we going to be required to explain how our business was adversely affected by COVID-19 and what will be required?
I think it's a pretty low threshold. Pretty much so far what I've seen is you just say, yeah, I've been adversely affected by COVID-19. And for most of us, it's not real hard to at least find one example. One of the easiest being is that my customer visits have gone down, or my receivables, people aren't paying on the receivables on time, paying on the bills. So that's not been a high threshold. That shouldn't be a problem.
Barbara writes, and outvoted 6 times, I did receive the EIDL loan in a small amount, but no paperwork has been presented. Is that normal? I don't know that anything's normal in this day and age, but
in any other loan, no, that would not be normal. But this is a loan program that's existed for a matter of weeks past in an emergency. So I think that everybody's trying to catch up with it. You will, I am quite sure that you will get your paperwork. Part of it is that the banks and SBA have been working to get their forms together and get their processes together. Their priority has been on getting the money out to the businesses so that they can use it. And I think that has been the command from on high is, this is a crisis, get people the money. Don't let the process get in the way. And that's probably what's happened here. Your paperwork is probably somewhere on the works, on its way to you. Get in contact with your banker, you will find it. The fortunate part is that it's not a particularly egregious loan, and I hope it works out for you. But the fact that they haven't gotten you the paperwork doesn't mean that you're not. It's not going to let you off the hook here either. So just do your best and keep an eye out for it.
So Matthew writes a question. I think you covered this briefly in the opening presentation, but he says, I have a few part-time employees that were making maybe $120 to $140 a week. They do not want to come back to work given that they're getting $600 a week in unemployment. Can I replace them so long as the head count is the same? Rightfully, even if we do come back, it's likely that the part-time employees will not be needed because we won't be able to have 100% occupancy.
Yep. The way I read it is it's the head count. And what they're going to do is, it's not necessarily at the beginning and the end. They're going to watch that head count throughout the period. So if you've got people that you need to replace, you want to get out there and you want to replace them quickly. Keep that payroll, keep that head count full.
Demir writes, if I was approved for PPP today, what month cycles of payroll can be forgiven?
Last that I've seen is that it's the payments during this qualified period, which basically is, from what I've seen, ends June 30th. I haven't seen if they extended that in the new extension of the bill adding more money. It's possible, but what I would calculate, I would look at that conservatively. And if I was looking for forgiveness, I'd want to make sure, and I'd want to be getting that money out to people now. The whole point of the bill is to keep money circulating. They don't want you sitting on it.
And that pretty much answers Michelle's question, which has also been upvoted significantly. We're not going to get our PPP proceeds until May 8th. Will be less than 8 weeks to June 30th. Do you expect the government to extend past June 30th for folks like us?
I don't know.
Okay.
This was an incredible, this was an incredible bill that came through in a moment of extreme pressure. I can't predict what they're going to do.
Okay. What does the $100,000 annual compensation cap refer to? Am I looking at net income? What does the cap mean?
Okay. No, I think that is not the net. I think that is going to be gross. And because I'm looking at the language in the statute, and it refers to compensation of an individual employee in excess of an annual salary of $100,000. So they're not talking about gross or net earnings. They're talking about the salary. So the way that I read that, you've got to calculate that off the gross.
Okay. We have seen the FTE calculated numerous ways. What is the correct calculation for figuring correct FTE numbers? For example, is it the calculation of hours worked over the applicable 8-week period, or just the number of FTE on June 30th?
I'm afraid I'm afraid I couldn't answer how they will be applying it when it comes to forgiveness in this case, mostly because they haven't started doing it yet.
Okay. And I will, just based on memory from previous episodes, we've had some SBA experts on that have talked specifically about calculating FTE during the webinars. You can go to our YouTube page. The link is in the chat section, and find some answers there on the FTE calculation as well. Aaron writes, we got our PPP loan on April 24th, which starts our 8-week to end June 19th. Do we have to keep everyone employed through 6/30 to get the forgiveness?
The payroll calculation period is through again, it's what you got to do is you've got to keep somewhere I had in my mind that it was June 2nd. I can't remember why, but I'll tell you what, it's you need to keep that head count for the period when you're using those funds. To be safe, I would do it through June 30th. There's something in the back of my mind that's saying June 2nd, and I don't know why. But if it's going to make a significant difference, I think that's something that you should probably consult with somebody and dig deeper in and make sure exactly when that is, if the timing's critical.
And err on the side of caution as well, I'm hearing you say. Will we be penalized by reduced forgiveness if we maintain the same employment numbers as we went into the loan, but have a reduced payroll for a variety of reasons? For example, I fired a longtime salesman just before the stay-at-home order began, had a fairly significant salary that was baked into the beginning loan amount. Without his salary, we will never be able to hit the 75% number. Also, because sales are down, our salespeople will have naturally lower commissions. Can we try to hit the 75% number by giving small, reasonable bonuses, which we would normally do this time of year anyway, as our fiscal year ends in June?
I believe that it is the reduction in employee wages or reduction in the number of employees. Let me see if I can find that here really quickly, because that's an important question. So Dale, if you can fill some air for
Absolutely. So I'll dance on the stage a little bit. I remind folks we've got about 6 minutes left in this webinar. I can tell you right now, and I'm so sorry, we're not going to be able to answer the remaining 48 questions that are there. If you have asked a question and you want to read through and see if there's a similar question to what you've asked, I would encourage you to go through and hit the thumbs up button next to that similar question. Get upvotes for those questions so that we can push those questions that are of most interest to the majority of the audience up to the top for us to answer in the next now 5 minutes. That would be a fantastic thing for you to do. And we appreciate you understanding our limitations on time and the ability to get as much information out as possible on this. And Wyatt, I'll just ask you to give me a thumbs up when you say that you're ready to answer this question. Also, a number of webinars have been posted to our YouTube page. This, I believe, going off the top of my head, is the 4th or 5th webinar on the PPP EIDL loans from SBA. A lot of information there, and you are welcome to go take a look at those. They're all recorded and posted to BBB's webpage, YouTube page. That link is in the chat box if you want to grab that link. Also, don't forget the Josh Linkner webinar that's coming up if you want to look at some ways to add value in your business in the midst of everything that's going on. That is an opportunity for you coming up this Thursday at 2 p.m. We would ask that you register for that live webinar. And just keep in mind that all of these webinars are recorded.
All right.
It looks like he's ready to answer.
Yeah. Okay. That's a tricky one. One, you got the headcount issue. Two, it's if you have a more than a 25% reduction in salary, or if the wages of the employees, then you're going to have reduction in the loan forgiveness. But there is some room to reduce those salary and wages to about 25%.
Okay. My bank indicated the date from the time the PPP hit my account within 8 weeks is the period I used to calculate expenses, not February 15th. Is this correct?
I believe that is correct. You're looking at going back and well, to calculate expenses, or what are we talking about? About spending the money, or
they're talking about calculating expenses.
Okay, it's as far as calculating, it's as far as spending, and yeah, it's that 8 week period is what you want to be working on those expenses.
Okay. If our full-time employee count during the 60-day window is below the FTE count from the prior year for the head count, does the FTE head count forgiveness reduction calculation? I'm having troubles reading this one live. Let me go back and just make sure that
it's gonna. I'm not gonna have a good answer for that. That's gonna get too tricky into the details, and I just don't have a good answer for it.
Okay. Would storage rent be considered property rent?
Good question. They just said rent. I think that if it's rent that's used in your business, I think whether it's storage or whether it's the facility, I don't see any difference in that. What seemed to be critical was that to the extent that you're using it for rent of your business properties, that no more than 25% of the total loan goes to that. So I think if you've got a storage unit that's part of your business and you're paying rent for that, I think that falls under the intent of the act.
Okay, so Kurt asks our question in a prior BBB webinar. I'm going to preface this right now that Wyatt has not seen that prior BBB webinar, but I think we can ferret the question out in that there was some guidance that monies left over from PPP as of June 30th had to be immediately paid back. Is this your understanding? So if we hit June 30th and there are monies left over from the PPP loan, do those monies have to be paid back?
No, the way that I read it is that what happens is that it just becomes rolls over to a 10-year loan. You have to pay it back, but it just goes over to a regular loan.
So you don't have to be, well, you can choose to pay it back immediately, so you're not making payments on it. But it does have to be paid back after that June 30th, if they're not spent by June 30th.
Right.
If our full-time employee count during the 60-day window is below the FTE count from the, okay, that's the one I read and we said we would not be able to answer. I'm sorry for that. We have salary staff and hourly staff. The hourly staff are not currently working during this time as there is not work. Will this affect our PPP? We did receive the loan.
Yeah, I think that the idea is they want you they want you keeping your staff full, because the amount was calculated, the amount that you got was calculated on a full staff load. And I think that the intent is to keep people working, or find them something to do, and also it's to keep the business operating too. So I'd probably look for something for those folks to do.
All right. Wyatt Johnson, Angstman Johnson Law Firm, Boise, Idaho. Thank you so much for your time. You've spent a full hour with us. It is much appreciated. You've given us a lot of wisdom and insight into these ever-changing rules. So thank you very much for your time. I know that our team at BBB is working to amass a question and answer document from the number of questions that we've had during these webinars. And we're going to be posting that question to our coronavirus landing page. And that link is going to show up in your chat box here pretty soon. So what I would recommend is that you come back to that landing page on a daily basis to see the latest information that we are finding and collecting specifically for you small businesses, and check back on that page. That Q&A sheet should be there soon. We're doing just some final touch up on that and are going to be available there at the Building Trust in Trying Times landing page. The link just arrived in the chat box. So before we close this out, I'm going to give you 5 seconds to grab your cursor, move to the chat box, highlight that, hit the copy button, and then paste it into your browser URL and create a bookmark on that page. That'll be a big help for you in the coming days as we work to amass as much information, because we know there are so many questions about the SBA PPP and EIDL loans that are still left unanswered. We're sorry about that, but we are doing our best in the time allotted. So with that, thank you so much for your patience and your understanding. Wyatt, thank you so much for your wisdom and expertise in the last hour. We really appreciate it. And we will wrap this edition of the webinar from Better Business Bureau up and say have a great day.